Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Starting on the daily chart, I want to put a little red box around a area right through here where the market was consolidating over the last 3 or so trading months. We saw the price move to the downside, and then we saw it rebound back to the upside, and then back down and up and back down to the old low and back up again, and then back down. And we fell below that outside of that red box in trading last week. That continued into trading this week, where the market continued its rotation to the downside, making a new low for the Aussie versus US dollar. It looked like the price was going to head lower, but we saw the rebound, helped by China data, also helped by maybe stronger US stock markets. We had a risk-on type of move, maybe higher commodity prices as well, helped the price push the price back to the upside of the Aussie versus US dollar. We moved back within the red box. So this was a failed break down here, and we started to see more buying here against the low of the red box, by the way, on Friday. That took the price higher and up to another swing area near the 0.6640 level. That level is defined by different swing lows and swing highs, mostly through this area right through here, but stalled right near that 0.6640 level. So in trading, trading this week off the daily chart, the levels that are going to be important to me are one, the 0.6640 level, and on the downside 0.65639. Let's call it 64 on the downside. So 64 on the downside, 40 on the top side. Those are going to be our key levels. Now let's take a look at the hourly chart and see if we could see if that chart gives us any sort of clues or ideas about key technical levels. And we take a look at the hourly chart. Remember, on the top side we had 0.6640 on the top side. Well, lo and behold, the high price that we saw on Friday came right up to the 50% of this move to the downside. The 50% level came in at 0.66376. Remember, 0.6640, that was where the market stalled on Friday, right near that 50% retracement level. So not only do we have the high of the swing area off the daily chart, we also had the 50% retracement, dual levels there. So that was a good reason why sellers leaned against that level. In the new trading week, if we get above that level, that would open the door for a potential move up to the 100-day moving average. That's or 200-day moving average. That's a green line in this chart. And if we move above that level, then we'd be looking back toward the 100-day moving average. That's the blue line in this chart. So that would be a more bullish bias here, a continuation of what we've seen from the Wednesday low, Thursday, and Friday move to the upside here for the Aussie versus US dollar. Now, what about the downside? If we look at this swing area on the downside that we saw first swing lows right through here, and then we broke below it and moved lower. We came up and retested it here, and had early sellers here before moving lower. And on Thursday, what did we do? We moved above this swing area right through here, came down, retested it before moving to the upside. Now, where does that swing area come? Between 0.6558 and 0.6566. I'm going to go back to our daily chart and remind you of the low of the box right here, the red box, was 0.6563, 0.6564. So going back to the hourly chart, 0.6564 comes right in between that swing area right there. So that was a reason why the market moved higher off of that level. It based against that level, moved higher, and why it was a resistance into the Thursday break and the Friday move to the upside. So guess what? This level is going to be our key level on the downside for two reasons. One off the daily chart, one off the hourly chart. And if we move below that level, then we're going to look at the converge 100 and 200-hour moving average, 100-hour moving average, looking to move back above that level. Maybe a little bit more of a bullish bias in the short term because of it, but we still need to get below both those moving averages to increase the bearish bias. So there's a lot of symmetry, I guess, from the technical levels on a daily chart and the hourly chart in the Aussie versus US dollar. One at the highs near 0.6640, one at a swing area, both on the hourly chart and the daily chart at the 0.6564 level. So we're going to pay attention to those levels and see what happens with the market price currently trading between those levels, looking for the next shove. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.